Hello Wolfpack, we're back here today on Bitcoin. Now Bitcoin in the last 24 hours has actually failed to close the daily candle above 23.8k. As you can see, 23.8k, this red line here, in fact I'll delete the other ones just so you can see it, has acted as a strong resistance, this lower red line, for the daily candle on a couple of occasions here. For example, with the wick on the 19th of July and also with the closes just about a week ago, and now with the closes again. We're struggling to get through that level. It is very much the top of the local range. If we zoom back to 2020, right, to late 2020, we can see December 2020, we had the same situation. We had 23.8k being a strong daily candle resistance and 24.2k being a strong daily wick resistance. Exact same situation we're facing right now. However, as you can see in 2020, when we finally did break above that level, we did see a zoom to the upside. Now, this was obviously because we were in a bull market at that point. We're not in a bull market anymore, so we can't expect a similar amount of volatility to the upside if we do end up breaking it. But the point is, that is the critical level. All right, and right now we are in a bearish structure. We are in a ascending wedge formation with these solid yellow lines, and so there's no denying that. But what we can see is that, well, that formation doesn't necessarily need to be as strong as we'd like to imagine it to be. As you can see, if we look at things like, for example, the Gaussian channel and the Ichimoku cloud, we have broken to the upside and broken within the Gaussian channel and flipped green, and we have actually broken within the Ichimoku cloud as well. Generally speaking, when you do that, it means that you're going to go through them. Generally speaking, when you enter the Gaussian, for example, it means you're going to go through the Gaussian and continue to the upside. Now, this is bullish, right? And so, yeah, we can expect based off that to continue moving to the upside. However, what I can say is that until we actually get the close to the upside, I'm not going to be buying any Bitcoin, right? When we close a daily candle above 23.8k, yes, I will be buying Bitcoin in that scenario. The reason I'd be buying Bitcoin in that scenario is because if we're zooming up here, for example, on the weekly chart, if we're zooming up, we can see that between 23.8k and 28.6k, there is basically no historical resistance on Bitcoin. The volume profile confirms that. Bringing up the volume profile, we can see there is a massive gap. It's just loading in. Massive gap between 28.6k and 23.8k. And so if we do manage to break above 23.8k on a daily candle, we should realistically, according to the TA, be seeing a swing to 28.6k. And so it stands to reason that, hey, if we break 23.8k on a daily candle, right, which could be happening anytime soon, we should be buying Bitcoin, at least for a swing, right? Now, if we break above 28.6k, that would be a break above the bull market support band, and it would also be a break above the critical level that held us up for the entirety of the bull market. And hence, breaking above 28.6k would change the macro structure to a bullish macro structure. Now, this is where people get confused. They say, how can you say you're going to buy 23.8k, but you're not bullish in the market? It's like, well, I'm bullish short term. We need to make a differentiation, right? There's a difference between being bullish short term and being bullish long term. For me to be short term bullish, for me to buy Bitcoin, I will buy at 23.8k if we close above it. However, for me to be long term bullish on Bitcoin, macro bullish on Bitcoin, I would need to be seeing a close above 28.6k, right? That's very simple, very straightforward in my point of view. And so, yeah, essentially, I'll buy Bitcoin at 23.8k, and then I'll sell at 28.6k, and then if we break 28.6k, I'll buy again. That's how I'm going to play Bitcoin. That's how I recommend everyone plays Bitcoin, because that's the objective macro structure. Even someone like Mega Whale Crypto, for example, who is more bullish than me on the market, would agree with that. That is how you play this trade, right? That's how you play it. And so, yeah. But one thing I do want to keep an eye on, and this is the only thing that's kind of holding me back here, and then I'll get into CPI, which is very bullish, is this structure here. We have an ascending wedge formation with descending volume. Generally speaking, that's a pattern of exhaustion, and generally speaking, that leads to a break to the downside. So we need to be watching out for that, and we can see that, hey, there is a chance that we actually come up and fake out above 23.8k, go to like 25k, and then come down and break the wedge, which would be the ultimate scam, and it is definitely possible. It's something we need to keep an eye on. So don't say I didn't warn you if that was the case. But now let's look into CPI, because CPI is very, very interesting. CPI, as you can see here, has been rising. CPI is obviously a consumer price index, which is basically inflation, has been rising month on month for a long period of time. It's currently at 9.1%. The higher inflation goes, the more actions the Fed needs to take to combat inflation, the lower the markets go. That's essentially how it works. But right now, what we're seeing is the market is forecasting, for the first time, by the way, for a long time, that inflation and CPI releasing in 2 days is going to be coming in lower than it did last month. Now, if CPI and inflation comes in lower than it did last month, that is going to give the market a lot of room to breathe. That's going to be very bullish for the market because it means there's kind of like the single signal of a top rounding out for inflation. Now, what we generally see, I'm not going to show you now, but what we generally see is when inflation tops out, the traditional markets bottom out. And as you know, if the traditional markets bottom out, that means Bitcoin bottoms out as well, right? Because they're both connected to the systematic risk, which is basically inflation, right? So basically speaking, and just narrowing it down, the market is predicting inflation to be topped out. If inflation has topped out, that's very bullish, right? What we can see if we're looking at bond yields, for example, is that each green line here represents where the bond yields were at the last CPI release. We can see that each time the bond yields are actually higher than the last time. Right now, we're seeing the bond yields only slightly higher, and on the DXY, we're seeing the DXY actually a lot lower than it was on the last CPI release, meaning that it's very likely at this point that CPI and inflation will have been coming in lower, and it's very likely that inflation has actually topped out, which would explain the recent pump for Bitcoin, and which would explain the recent pump for the S&P 500 as well. What you'll notice is that this pump for Bitcoin started the day after the last CPI was released, meaning there's a high chance that the I don't know, insider traders, the whales, whatever they may be, I don't know, people who are looking at oil prices, etc., actually knew that inflation had topped out on July 13th and bought Bitcoin and bought the S&P 500, bought all the risk on assets before everyone else knew, and now we're just waiting for the confirmation of it up here. So it does, in my opinion, make perfect sense for inflation to be topped out. And with that said, I think there is a very high chance that Bitcoin does actually break 23.8K. With that said, I will not be acting until it is confirmed. So what you'll notice is that there has been a dramatic shift in my opinion. The shift in my opinion has happened because the macro situation has shifted dramatically. If you asked me 3 months ago where I thought inflation was going, I probably would not have said it would top out this early. I would have said inflation would top out in Q4, and hence the market would have bottomed in Q4. Now, technically, I'm still standing by that Q4 bottom prediction until it's invalidated, which would be 28.6K. But I want you to know that I think it's unlikely at this point. I think it is more likely than not at this point that the market has actually bottomed out at 17K. And I think that we need to be focusing on buying the trend reversal. By the way, that's what I've said from the start. If you actually look at all my videos and all my content, I think at least every second video I've said it's way more important to buy the trend reversal than the bottom. So I don't see this as a missed opportunity. In fact, we've been trading the entire way up. You have to remember that I'm a day trader at heart. I've got the V.I.P group. We day trade altcoins. I'm trading constantly. So it doesn't actually matter where I buy Bitcoin, because long-term buying Bitcoin isn't really a priority. The only reason I do this is because of a YouTube channel, essentially, because I know a lot of people are interested in long-term buying Bitcoin. It doesn't really bother me too much where Bitcoin bottoms, where Bitcoin tops. As long as I'm making money on altcoins, I'm all good. So just wanted to let you know there has been a shift in the macro environment. CPI will confirm if that shift is actually correct or not. I think it will be correct. I think the market is in a short-term bullish structure, and breaking above 23.8K will confirm that short-term bullish structure. We're still in a macro bear market until we break 28.6K, and so I'm not going to completely distance myself from my point of view on the macro yet, because I'm just objectively looking at this market and saying, okay, well, in order to break this macro bear market, we need to break 28.6K. That's objectively true. Now, I think that's more likely than not to happen, but it hasn't happened yet. So that, you know, I would say at this point, if I was looking at probabilities of the market going up versus it going down, I'd say that the probability of the market going up is a lot higher at this point, but we still need to acknowledge the reality of the situation. The reality of the situation is we're in a macro bear market. I understand that's a little bit complicated for people to understand because they kind of just want me to say I'm bullish or bearish, but unfortunately the market is really not that simple. I think everyone who's an experienced analyst will tell you the same thing. There's a difference between what you think is going to happen and what your predictions are based on the objective realities, right? And I'm sorry to overcomplicate it, but that's really what it is. So we've seen a dramatic shift in the macro point of view. Inflation is very likely to have topped out. With inflation topped out, it's very hard to deny the fact that Bitcoin will likely go up. And so that's what I'm kind of acknowledging here. I think Bitcoin will most likely go up here on a macro time frame. But until it happens, until we get that confirmation, because I'm a breakout trader, remember, I'm not going to be buying Bitcoin. So 23.8K is the daily candle target. If we can close above that convincingly, that would be a buy signal for Bitcoin in my personal opinion. Thanks for watching, guys. Before we end the video, I want to check out Wolf's Crypto VIP. So I mentioned that I trade altcoins daily and the VIPs trade altcoins daily. This is where we do it, right? Click the join button on my YouTube channel homepage. We run this through YouTube. You can get access to 4 trading setups per week, prioritized reply to comments, a 2-hour lecture on market psychology, and exclusive Telegram group access where we can discuss charts and ideas together for just 40 AUD a month, which is 28 USD a month. And then we've also got BitGet Exchange, which is the exchange we actually use to trade for the VIPs, and the exchange that I recommend everyone uses, not just the VIP members, even the people watching this content for free, should be using the BitGet Exchange. Why is that? It's got half the fees of Binance. It's got systems in place to stop liquidation wicks from happening, right? So exchange-driven liquidation wicks, like on Binance, you get random wicks down to 4K every 3 days, right? Not every 3 days, but you know what I mean. That just scam people and just get rid of all their money, which happened to me. One of the reasons I changed to BitGet. We've also got a kind of intricate future system that uses coins that have actually been fundamentally tested. On exchanges like Binance, they literally list coins that have been rug pulled before, right? This doesn't happen on BitGet. You get coins that have been tested by the market, that are tested for their fundamentals, that don't have any massive inflation in the coins themselves. So we have about 60 or 70 coins here, I don't know how many there are off the top of my head, that are tested, made by traders and put on the exchange by traders for traders to utilize, which is great. Sign up using my referral link in the description below and get access to a reward center as well. And then also, a company developed by myself and Megawa Crypto, which is the Crypto Academy, right? Become a trader, 10-unit course. If you want access to this course, 10 units basically teaching you how to trade, basically from the fundamental concepts all the way through to advanced risk management, how to find trades, how to set stop losses, where to place them, how to trade market patterns, how to trade indicators, literally everything you need to know. And you might think, oh, well, I can find this information online for free. It's like, yeah, you can if you spend hundreds of hours of your life. If you want it in one consolidated place where you can access for a lifetime, for one lifetime payment, with all the information you need, all intricately analyzed, all showing you examples, etc., worksheets, all of that stuff, this is the thing for you. Go ahead and chuck us an email at cryptoacademycourses@gmail.com and we'll get back to you with all the relevant payment and details on the course and the information relevant to it. Thanks for watching. Hope you enjoyed the video, guys, and I'll catch you in the next one. Cheers.